Hello, everybody. Welcome to Cigars and Syndication. I'm Robbie Rogers. I'm sitting here with my co-host Jay Noor. He is CEO of Albany Park Capital, and we're here to hopefully educate y'all on some real estate and cigars.
Thanks, Robbie. My name is Junaid Noor. I am one of the founders of Albany Park Capital, and we wanted to start this podcast off because we want to educate our investors and the general public about investing in syndications, mainly real estate, passive investments, and we love cigars, so we're like, why not put it together and call it Cigars and Syndications?
Well, today on the podcast, we're going to be smoking a Plasencia Sixto 1. It's a rather large cigar. It's a 60 ring. It's 6 inches long with a Colorado Claro wrapper with Nicaraguan binder and filler. So far, it's early on, but I get a nice, nutty, earthy draw from it. It's a good, easy draw, and we'll let you know more as we continue the podcast.
I really like this cigar. It's got a very smooth draw, and just because of the bigger ring gauge, and I really like the fact of this. It's a hexagon. I think it's a hexagonal press. It's like 6-sided press, and it comes with the box. And the box is also in a hexagon press. It's a very good flavor. The only thing is that I think the smaller ring gauges draw better flavor than the larger ring gauge. Even though the larger ring gauge, I think, has a much better airflow. But more about the cigar later.
Well, so now that we've learned a little bit about what we're smoking today, what exactly is a syndication?
So, Robbie, the basic of a syndication is when 3 or more people, a few people, a group of people get together to accomplish a task. Now, we know about criminal syndications, right? Like the mafia. But in this instance, we're not going to be committing any crimes. We're going to be pulling money together to purchase a real estate asset.
Speaking of mafia, aren't you from Chicago?
Yeah, so what? We're from the town of El Capone.
So how do the syndicates get their money?
Well, crime syndicates get their money by, no, let me not get into that. So the way the syndication process works is that people get together, they pull their money, and they'll buy an asset. Now, that gets us into active investing versus passive investing, right? As an active investor, people have been doing this, and I used to do this myself, where I used to buy single-family homes. I'd go out, find the property, do the feasibility, evaluate it, do the rehab, get the loan, rent it out, or turn around and flip it.
And when you're doing it that way, though, you absorb all the headaches, right? You're responsible for all the repairs. You're responsible for the tenant, all the landlord duties.
Right, and you're actually also responsible for the loan. So if it's your first house and you don't know what you're doing, and you wind up getting a loss on that deal, or you wind up overestimating the appraisal value or underestimating the construction budget, then what will happen is you're going to wind up paying money out of your pocket. And at the end of the day, if you can't pay the money out of your pocket, the bank will come in and take the house. In a passive scenario, you're just the investor. You're not signing on the loan. You're not giving any guarantees. You're basically just investing in a deal where an experienced operator is going to take on that responsibility.
So someone like a doctor or a lawyer or accountant that wants to invest in real estate, a syndication would probably be a good alternative.
It would be a great alternative. With syndication, you really have to think about 3 aspects: time, control, and liability, risk. So, if you have, so the questions you need to ask yourself are, do I have the time to purchase a property and rehab it myself? Do I want to take the risk? Do I want to take on that liability? And if I don't want to take on that risk and still get a good return, a lot of the syndications that we do get anywhere between a 12 and 20% return, depending on the type of project it is. But if you just want to invest your money, don't want to take on the risk, don't want to give up all that time invested, then you have to give up the control. And by giving up control, what you're doing is you're telling your partner, who is your general partner, who is the experienced operator, you're basically telling them, hey, you know what? Here's my money. Go make me money on this money. You do the work. You sign on the loan. You do the feasibility for the property. You do the rehab, and you make sure that everything works well, and then you just report back to me.
So if I was a passive investor, you really rely on the syndicators to put the structure together and perform and execute the business plan, to get the returns that the investors are looking for.
Exactly. And you know what it is that with passive investment, you really have to kind of know who you're getting into bed with, so to speak, right? The partner, the general partner, so the investor is the limited partner. The person who's actually the working partner, as a lot of people would know it as, is known as a general partner. And the general partner is really the one who is going to run the business plan. And this is what it comes down to, whether you want to do your own houses or you want to invest passively. If you want to buy your own houses or buy your own properties, do you want to run the business portion of it versus just being a passive investor in the property? If you want to run your own business, then you go ahead and get a partner and purchase property on your own, or purchase property as an individual. But if you're a truly passive investor, that means you are not getting involved in day-to-day activities. You're not going to be running the business. You're going to rely on the person who has enough experience to be able to run the business.
Well, it sounds like through syndication that a smaller investor has an opportunity to partner with multiple investors and maybe go after, high value targets.
Absolutely. And that's what we look at it as leveraging your cash, right? The individual investor can take $100,000 and invest in a $40 million property. We are actually going to be having a webinar on one of the properties that we're looking at purchasing in Dallas, known as North Haven. That's about a $40 million property. And for $75,000 minimum investment, an investor can buy into that. And we have a targeted return of 18% over 3 years, 18% per year annualized over 3 years. And they don't have to do anything. They just have to sit back and collect their cash.
And that particular project is a value add.
Absolutely. That is a value add where we think we're going to get we target the property that we're purchasing. We're going to be purchasing it at a below market value. We're going to rehab it and then be able to refinance it at a higher market value and be able to cash out investors. Now, that's a lot of technical terms, and we'll get into a lot of these terms as we go on with future podcasts.
Well, what are some of the other benefits that you see as a passive investor?
Whenever somebody's investing in real estate, whether they're active investing or passive investing, there are 4 major benefits. One is the appreciation you get on the property. Property almost always appreciates unless you bought it for such a high price that it's not going to appreciate.
So the syndicate, as well as passive investors, get to enjoy the benefit of the property appreciating.
Yes, the syndication, the syndication, which consists of the general partner and the limited partner, the active investor, which is the general partner, and the passive investor, which is the limited partner, everybody enjoys the appreciation. The other benefit of investing in property is cash flow. One of our properties that we had just closed on, which was Timberwalk, we closed on it last month. We are going to start distributing cash from the cash flow of the property as of September. And we just closed on it in August.
So as a passive investor, you could expect monthly or quarterly distributions as well as appreciation in property.
Absolutely. And depending on the deal, it'll be a quarterly distribution or it'll be a monthly distribution. Some deals allow us to start monthly distributions like Timberwalk within a month of closing. Other deals which require more work and more rehab work we'll have to wait 6 to 8 months before you start getting distributions, but we catch everybody up. When we say 18% annualized returns, we still will give you that 18%.
Now, what about from a tax standpoint?
So from a tax standpoint, the passive investor gets depreciation, and because of the accelerated depreciation that is available for passive investors in real estate, somebody who would invest $100,000 will get $50,000 of depreciation within their first year. So that's another benefit out of those four benefits that I mentioned. Depreciation is one of them, cash flow is one, appreciation is the other, and then of course limited liability, right? Your loss is limited to your $100,000 or $75,000 investment. You don't have to, you don't have to sign on a $40 million loan.
And those distributions would just be reflective of their ownership stake or ownership shares in the project.
Exactly. So each project has what's called a documentation, a subscription document. And the subscription document will tell the owners or the partners, the investors, it'll identify who the investors are, who the partners are, and what their distributions will be, what percentage they're receiving, and how much they own of that particular property.
Well, now that we all have had the opportunity to learn a little bit about syndication, I'd like to take this time to talk about Albany Park Capital a little bit, and how we might partner with y'all and help you grow wealth and help you invest your money in some syndicated real estate deals. Jay, why don't you talk about Albany Park Capital and its mission statement?
Yeah, Robbie. So Albany Park Capital, we founded Albany Park Capital because I have about 30 years of experience in real estate and in all aspects of real estate. I was a realtor. I was a mortgage broker. I started off as a CPA doing real estate taxation and audits. I've done development. I've done single family homes. And what I really wanted to do was I wanted to be able to educate our investors. I wanted to be able to pass on my experience and my knowledge to the average investors so they can build wealth, so they can get beyond the single family homes and they can get into larger projects and really just kind of build wealth. I don't know if you know this, but Albany Park was an area on the northwest side of Chicago that I grew up in, and when I was younger, I would walk around Albany Park, just walking from home to school, riding my bike during the day, and look at properties, and I would just kind of notice houses and buildings and how things were being developed, how things were coming up, and it really just got me interested in real estate. And from there, I basically decided to stick to real estate and develop all of this experience in real estate.
How can somebody that's interested in being a passive investor and interested in educating themselves on syndication, how can they get started?
Well, we have a very nice resources tab on albanyparkcapital.com. If you click the resources button, there's a lot of articles that I've written and some of the team members at Albany Park here have written that'll help in guiding people on passive investment opportunities. And this podcast as well. Also, if they're interested in investing and they are interested in certain deals, all they have to do is click on Invest With Us on albanyparkcapital.com, and they can log into our portal and see what existing deals we have.
Well, I hope everybody enjoyed the first podcast for Cigars and Syndication. Today we smoked the Plasencia Sixto 1. It was a really amazing smoke. Started off nutty and earthy, maybe a little with a leather flavor, and then about a third of the way through, you get a more of like a cinnamon peppery kick. A good easy draw, and I've not had to relight it. I would definitely smoke this cigar again. And I hope when you click on our podcast to watch them, I hope you enjoy a good cigar, your favorite cigar. And if you have any recommendations, reach out to us through Cigars and Syndication on any of our social media channels.
Yeah, I really enjoyed the cigar, and as you can see, I've kind of smoked it a lot further than you. I've smoked it down to the nub almost, but man, this is a really good cigar. But anyway, thanks for joining us. Look out for the next episode of Cigars and Syndications, and like you said, follow us on our social media. We hope to hear from you.
Invest wisely.